Do I need 20% down to buy a home? This is something that clients come to me and they're curious about this question. Let me tell you a little secret. Many of my clients get into a home with no money down at all. Watch this video to the end to find out if you can also purchase a home with no money down. Okay, to begin with, we're going to talk about actually putting 20% down on a home. Then we'll dive into the different types of home loans and the minimum down payments that are required for those types. Finally, you've probably heard of this mystical 0% down to buy a home. Here's the thing, there is a scenario where that can happen. All right, let's get to it. Okay, so to begin with, the 20% down dilemma. Now, when I bought my first home, I actually thought that you needed 20% down, and I indeed saved 20% down for my first home. In fact, I saved part of it, and then my parents loaned me, or actually gave me the other part for that 20% down. That's kind of an old school ideology. You really don't need 20% down on a home anymore. You don't have to save up this massive investment to buy your first home. It used to be that way, but it's no longer that way. But let's discuss the benefits of saving 20% down on a home. First of all, in this market, we've got a super competitive market. It's fair to say that in this competitive market, the more money that you put down on a home, the better off your offer is going to be received on a specific property. This market is definitely going to be a seller's market. Once a property goes up for sale, many times there's multiple contracts on that house within the same day. And if the seller is looking at these different contracts and they see one person put down 5%, one person put down 10%, and one person put down the full 20% or more, of course they're going to lean towards that contract. The reason they lean towards that contract is because they assume you have more money. They assume that you're a more qualified buyer. Another good reason to put down 20% is that you don't have to pay mortgage insurance when you put 20% down. So mortgage insurance can range anywhere from less than $100, depending upon your overall risk, your credit score, and other factors, or mortgage insurance can be literally hundreds and hundreds of dollars a month. So if you can get above that 20% threshold, you no longer have to worry about that. Another reason I like the idea of a 20% down payment is because you're going to give yourself a lower overall payment. The more money you put down, the lower your payment's going to be. Now, there is going to be some downsides to putting 20% down on a home. The biggest and most obvious downside is that you're going to be draining your savings to pay 20% on a home. So as an example, let's say that you bought a $300,000 home and you took $60,000 out of your savings to make that happen, or worse, out of your 401k, which I never recommend. Let's say you took it out of your savings and something happens in the future where you actually need significant savings. Let's say you get in a terrible car accident, God forbid, or something terrible happens where you need that bit of money, it's no longer available to you. So there is a significant downside to draining your financial situation and putting it into a home. Another downside is that saving 20% can take an eternity. If you're a first-time home buyer and you're trying to buy in this market, which is going to be easily, realistically, $300,000 to $500,000, and you're trying to save 20% of that, you could be saving and paying rent for an eternity to save that amount of money. Okay, so there's several loan types that are available for a borrower who's trying to purchase a mortgage. The two that come to mind immediately that don't require 20% down is going to be your conventional loan. Now, conventional loans do require higher scores in order to attain those, but many people think that they require 20% down on a conventional loan product, and that's just not the case. Really, conventional loan products start at 3% down in many cases. Now, the one that most first-time home buyers are going to be familiar with, and a lot of people actually have this type of loan program, is going to be your FHA mortgage. FHA mortgages only require 3.5% down. It's kind of well known that that's the situation when you're dealing with federally backed loans. Now, the difference between conventional and FHA couldn't be more different, even though the down payments might be similar. With conventional, as I mentioned, you need very high credit scores. It's very strict. In fact, getting you through the automated underwriting system requires not only really good job history and income, but really high scores and low debt-to-income ratios. So FHA is actually a very easy program that allows for a lot of credit mistakes. Yes, you can have charge-offs, you can have collections, and you can have all kinds of messes on your credit profile, and yet you can still get qualified for an FHA product. In general, 620 and above is what you're looking for FHA, but I have lenders that can do 600, and even sometimes they can do 580, and pre-COVID they could do sub 580 on FHA. Again, FHA is one of my favorite programs because they have really good rates. They require a low down payment, and they allow for kind of a messy credit profile. Before we get into zero money down loan programs, please like my video and subscribe to my channel. I'll be working hard to bring you a video each weekday over credit lending, real estate, and other relevant personal finance topics. Okay, so let's talk about the zero down payment option. There's actually lots of different options, but we're going to talk about kind of 3 ideas. Now, there's going to be 2 actual loan programs that are designed for 0% down. And then there's going to be some things that we're going to talk about at the end of this discussion that are going to be nice little tidbits of information where you can find programs that might be able to help you. Okay, the first 0% program that's well known is going to be your VA loan. Your VA loan for all of our veterans, thank you for your service, by the way. If you served in our military, most people are going to have the ability to attain a VA loan. And what I like about VA loan is it's absolutely 0% down. Okay, so that means that somebody, depending upon their income, could make a purchase and absolutely have to put no money down, just closing costs. There used to be limits on VA. In other words, they used to have caps just like FHA, which is usually around 400,000 plus, depending upon the area. Conventional is usually 500,000 plus, depending upon the area. VA used to have those caps, but it's recently changed so that your VA loans can go as high as your income will allow. In fact, I've recently had a client. Him and his wife had started a bridal company, and their business just took off. In 2020, 2021, I mean, they're doing ridiculous amount of sales. I don't remember exactly, but I'm thinking somewhere in the neighborhood of 50 million. Don't quote me on that, but it was a lot of sales. Anyways, as a VA borrower, he wanted to get $1 million house, and he was able to get that $1 million house with 0% down. Now, normally when you're trying to buy that big of a home, it's called a jumbo loan. And a lot of times you have to have a first mortgage and a second mortgage, and you've got to pay higher interest rate because of the size of the loan. But here, this veteran was able to get $1 million home with no money down. The next 0% down option is going to be your USDA programs. Okay, this program is for people who wish to purchase in non-urban areas, and the program has very specific requirements depending upon where you live. You really have to squeeze yourself into this little box to get 0% down on that program. Most people think of non-urban as in living in the country, and in most cases that actually is true for this type of loan program, but again, it's not always true. It depends on what state and where you're trying to purchase in. Okay, now this is going to be the kind of the third option. Okay, now my company and I live in Texas, in the Dallas area. Okay, so in Texas, we have many different programs that are considered bond programs at the state level that allow for people to get 0% down. Each state has these programs. There's also federal programs that allow for 0% down, and sometimes even allow for closing cost assistance. So these programs are everywhere, and I know that I've done extensive research and I've yet to see a state that doesn't have one of these types of programs. When you go to purchase your first home, this is something you're going to want to talk to your lender about. And some lenders will do the legwork on these types of programs. They'll do bond programs, they'll do the legwork on finding you this money, and a lot will not. So just because one lender tells you that those don't exist, doesn't mean they don't exist. If you have credit challenges or just need help with your credit, then I have a gift for you. I'll have my team complete a complimentary credit analysis specifically tailored to your needs. The only cost is that you're going to have to buy a smart credit report. This gives us the data to build out a customized plan. Please click in the link in the description below for more details.